Thank you, Dr. Cole, IPF and the City of London for hosting this exciting session on sustainable investing and the UK-India partnership. I'm delighted to be moderating this panel on the corporate landscape, the ESG corporate landscape in India, and the approach by institutional investors to it. A little bit about me. There is obviously a more detailed bio in there. I'm a partner at Jiva Capital. I've worked over the last 20 years with public and private companies from India, helping them to raise finance. Over the last 2 decades, we've seen a number of companies come and list in UK, most of whom have had a dismal track record, many driven by governance challenges. So today's panel is obviously close to me, because much of my work and my time is obviously involved in also bridging expectation and cultural gaps between company promoters and the UK investors. Following on from the earlier panel, we heard today the global trends around ESG. A lot of this is being led out of Europe. 3/4 we heard from Sir Roger Gifford. Over 25% of global investment is now in ESG funds. Almost all fund managers, institutional investors, banks have an underlying ESG aspect into all their investments or their lending. And companies with better ESG standards tend to outperform their peers. However, India, with 17% of the world's population, seems to be still at a very nascent stage. I think even a small shift will obviously have a huge impact. India has the 7th largest capital market with over 2 trillion of market capitalization, and yet there is a very small amount, 25 billion we heard today, that is only in ESG funds. I think as we stand here today looking ahead, India is expected to grow at 6-7% over the coming decade, and with a very young demographic profile, it faces a huge task ahead of itself in meeting the potential, its economic potential, while remaining sustainable. Undoubtedly, the ESG potential is huge for India and for investors, but I'm sure there are challenges. And I'm really happy to be joined here today by 3 experts and people who've worked a lot with the Indian corporate side and the investor side. And I'd like to welcome Jal Irani, Ajit Dayal, and Raj Bhatt. Each of them will be putting together a short presentation, and following that, we'll have a panel session and a Q&A session. So if I could ask Raj Bhatt to start with his. Raj is from Elara Capital.
Thank you, Pooja. Because a lot of numbers have been discussed here, so I'm not going to talk about numbers. And I purely focus that ESG trends in India and also globally. I think we've discussed that what impact it has on the share prices or the shareholders' value. We have seen from the presentation from last panel that we had seen serious erosion in the equity values if we have something like this happens, and we have companies like BP, which was not mentioned but very important. They paid $19 billion as fine for the oil spill. Then we had Vale, which has recently paid $7 billion. Then you have Daimler, you have got Volkswagen. So all these companies have problems with respect to the governance. And as far as India is concerned, I think most important thing in India is that corporate governance has been at the forefront. And the government has done a lot of work in terms of bringing out legislations to ensure that companies do have good corporate governance. And when it comes to social responsibility, government again legislated CSR, and the Bombay Stock Exchange has come out with some listing, through SEBI, some listing regulations where companies, top 500 companies have to file some corporate responsibility reports. So these are government-driven initiatives. And if you look at the companies which figure into ESG, we have largely service-oriented companies. You have Infosys, Wipro, or banking, SDFC. But manufacturing companies are not figuring out there, where manufacturing is very important, because I think the most important aspect of ESG is environment now. And last 2 decades, we have seen the change in the perception globally about the global warming, where we have seen the significant amount of interest in terms of reducing the greenhouse gases emissions. So I think we got to do a lot in India in terms of manufacturing side, and India is growing at 6-7%, probably it'll grow at 8-9% once we see implementation of government policies. So I think ESG will play a very important role in India. And I think environment, human rights, and the conflict resolution, and of course the corporate governance and corruption is going to be important part of ESG measurements. And of late, the rating agencies also are factoring in ESG as a factor. I'll just share with you, we were advising a company called Greenco, based out of Andhra Pradesh. They're into solar power. And about 3-4 months ago, I was talking to the promoter, and he was quite wary of launching his green bond. I think it was the first green bond done from India, if I'm correct. And I was with him, and they had issue of a $1 billion. They had a subscription of $4 billion. So there is a lot of demand for green bond or companies which are conscious about the ESG responsibilities. So I'm not going to take long time because I have a presentation which I've submitted. So I'll rather be answering questions later. Thank you, Pooja.
Thank you, Raj, for that quick overview. I'd now like to welcome Dayal, who'll give us a little bit more analysis around ESG in India from a sectoral perspective as well. Thank you.
Thank you, Pooja. I'd like to thank the organizers for this opportunity. Also, I'd like to say that it's indeed an honor to be sitting side by side with Ajit Dayal and Raj Bhatt. You all may not know that Ajit Dayal was my very first boss. And no, and oops. Indeed, one of the finest in the industry, one of the best fund managers and a good friend now. Likewise, Raj is a stalwart and a good friend.
There's no ganging up against me.
Actually, that is exactly the case. Pooja is a nice person as well, for the record. Okay, I have been given only 5 to 7 minutes, so I'm going to tell you all only 3 things today. Firstly, how big is ESG investing in India? Secondly, corporate India is taking the lead over investors, not necessarily over the corporates globally. And finally, how you as investors can actually profit from ESG in India. So this essentially shows you that globally ESG investing is $31 trillion, which is about 32% of the global pool of assets look at some form of ESG filter or the other. And the interesting thing is that half that money is actually the European pools. So you all guys out here in this room are by far the largest in using ESG as a filter globally. The Americans are, of course, catching up fairly quickly. But when it comes to India, and this global pool has nearly doubled over the last 6 years. And similarly, when you come to India, the pool of ESG investing in India has also doubled, but it's only $25 billion versus 31 globally. So that's only 0.1% of the global ESG pool is actually invested in India. Now, interestingly, India has got the highest pollution levels in the world. just as an example, 14 of the 20 cities in the world, the 14 of the 20 most polluted cities in the world are in India. So isn't it an irony that actually the country which needs your investments the most has actually got the least of it? Now, there is only really there's only really 2 ESG funds. So all this $25 billion is of the pool of money which is from outside, which sort of looks at ESG filters while investing in India, which is 7% of the FPI pool, which is not significant. But when it comes to the domestically managed money, there's only 2 local funds who actually have got ESG funds in India. Interestingly, the first of these funds, so SBI Mutual Fund, took the lead, and actually they converted one of their mainstream funds into an ESG fund, and within the first month they got 25% redemption. The reason being that the investors told them, we don't want to do charity. The fact of the matter is that in India, actually among the investors pool, there is very little knowledge of what is ESG. So there's a lot of work which needs to be done on that. So firstly, the point is that ESG investing in India is actually at an insignificant stage. The second thing is, I'll demonstrate to you why you as investors are actually missing out such a huge opportunity and an easy one at making money. Now, there are about 100 ESG funds globally already, and you'll be surprised there are 7 already ESG India funds. 2 of the most popular funds, of course, we heard Harvard of MSCI present some time back, and MSCI India was launched in, MSCI ESG India Fund was launched in 2003, and that is by far the most popular fund. And as he demonstrated, actually the fund has outperformed consistently over the last 10 years, in fact, by a margin of 2x. So the underlying index has gone up by about 4%. The MSCI ESG India fund has gone up by 8%. So that's a very easy outperformance if you all guys want to make money in India. Now, it's not only just plain simple making money, but its risk-adjusted returns are very positive. The beta of the fund is 0.89, so actually the risk is lower. The maximum drawdown is more favorable. You know, the worst time you want to be underperforming is when the markets are underperforming, because the risk of losing one's job is significant. So actually, the maximum drawdown suggests that when the markets fall, these funds are outperforming. So you're actually investing in a more safer asset class. And as a result, the Sharpe ratio is actually higher. So actually, the risk-adjusted returns of this asset class is superior, and hence you all guys are missing out on a significant opportunity. How does corporate India fare? Now, corporate India, actually you will see from the chart on the my left-hand side that actually corporate India, their ESG compliance is doubled since about 2002. And corporate governance is actually the highest. On the environment front, it really sucks. It's the lowest. Now, how does that compare with the sort of global standards? So the first point here I'm trying to make is at least corporate India is doing better than investors to that extent. However, the chart on the left-hand side will show you that even though corporate governance is the highest among the 3 parameters, actually it's it's still low globally. And on environment, India has got actually half the level of disclosures as global levels. So the second important point is that while corporate India is ahead of investors, it is yet not as high as global standards. And when you look at sectors, we've looked at the top 100 companies in India. And out of the 11 sectors, we find only 3 of the sectors which outperform the global benchmarks. That's the IT industry, cement, and engineering. The rest of the sectors are actually not up there in terms of comparability to the global benchmarks. We've done 3 case studies. I won't run you through all of them. Mahindra & Mahindra is the one which has taken the lead. In 2007, they voluntarily started ESG. And what they actually do is that they do a very detailed matrix of what optimizes returns for stakeholders as well as the business. So they actually marry the two, and what is most important is what they focus on most significantly. But this is an interesting case study to follow. And finally, the 6 top-down themes that we would suggest. Of course, bottom-up investing is important, but the top 6 sort of top-down themes that we would suggest to invest are firstly into housing. As you know, the government plans to build 50 million new houses, and actually mass housing is growing by as much as 40% per annum. So this is a significant ESG opportunity. Employability. As you all know, Indian literacy levels are skyrocketing, but skill levels are not. By 2023, it's estimated that half the population will have the wrong skills. So actually 650 million people need to be re-educated. Now the size of that opportunity is humongous. Financial inclusion, 300 million new Jan Dhan accounts have been created, and in fact, digital banking is growing by 50% per annum. Healthcare, only 1% of GDP has access to healthcare. I believe in China, that's 6%, potentially a $100 billion opportunity in 4 years. And like I said, India has got 14 of the 20 most polluted cities in the world, and plus it's wants to build 175 gigawatts of power. City gas distribution needs $20 billion alone, which is as much as what foreign investors have invested at $25 billion. So even a small subsector needs actually a lot of money. And digitization, just in one subsector, in e-commerce, is a $1 trillion opportunity. So what we would suggest is to focus on these 6. In conclusion, 3 things that I'd like to leave you with. Firstly, corporates have taken in the lead in India, yet they have a long way to go. Secondly, frankly, you as investors are doing nothing. You all need to do a lot more. You've got only 0.1% of ESG money invested in India. And finally, the risk-adjusted returns are there for the taking, and we would suggest these 6 themes to be investing in. I'd also like to say is that we've published this ESG Way book. There's a copy lying at the back. If they are over, be nice to me, and I'll make sure I'll give you a copy. Cheers. Thank you.
Thank you, Dayal, and thank you for keeping it within the time limit. I'd now like to welcome Ajit, who's obviously started his own fund, Quantum ESG. So we hope to get a little bit more insight as to how that would really work, the real execution piece of it.
Thank you, Pooja. Thank you very much for having me here. I'm feeling pretty cold, and we're talking about climate change and global warming, I guess, but it's a nice place to be. It's a beautiful hall. Just a little story, since Dayal spoke about me being his first boss. So in 1990, when we started Quantum, I put an ad in the Times of India saying, wanted research analyst. And I had my father's clinic as my office. My father was a doctor, so I'd taken one room for him to start my little research operation with this big ambition before India's reforms set forth by 1991 by Manmohan Singh. And it was, I think, a weekend morning. It was like Saturday. The doorbell rings. The door was closed. So I went up to open it, and this gentleman was out there. And he said, I've come for a job. And I said, OK, let's talk. And he had a BSc in chemistry. And he thought he was applying for a research job in a doctor's office. And here he is now as a wonderful man and a great analyst with Edelweiss. So that's the history of how I met Dayal. Bunch of disclosures because of UK laws. Much as we're trying to talk about saving the world, we have to also save our skins and make sure that we're not saying anything which upsets the regulators. So there's a disclosure on that. And prior to starting Quantum, I met a gentleman from Credit Suisse. I can't remember his name, in India. He was a South African. And he said, young man, I was young then. He said, what would you like to do? I said, set up an investment firm. He said, one bit of advice. When you shake someone's hand, and you get your hand back, count your fingers. If you don't have 5 fingers, don't shake their hands again. And investing in India is an absolute minefield. We've lost our limbs and legs and the works, and we have to continuously rebuild all of that stuff. And it's really been very sort of interesting to invest in companies in India where you know that the founders treat you differently because you're a minority shareholder. And that's the governance part. They really believe that they're doing you a favor by letting you make money from being a shareholder in their company. And I hate it when a founder decides how much rate of return you should get as opposed to the market deciding what you should get. So I hate it when founders, and these are some of the largest companies in India, they have substantial weights in the MSCI and other indices, and they're really fraudulent people in my view. And we haven't touched many of these companies since 1994. This is the 25th year anniversary for Quantum, at least, as a firm, where we've stepped away from some of these large companies, which we believe are a combination of Enron, WorldCom, and UCOS, all rolled in one. And you have no idea which leg of that stool is going to break, and when it breaks, you don't want to be around. So that's our little, sort of introduction of our firm view on governance. What we've done recently, I'd actually retired. I quit my company 2 years ago, quit the boards, and I was on a beach. I was going to show you the slide, which is the view of my apartment in Florida off the beach. And I was there for a year and a half, and then I met a gentleman from eCube, a gentleman called Mukund Rajan. Mukund was with the Tata Group, and he spoke about ESG. And I'm not a big sort of a climate change, fanatic. I'm not an environmental guy, but I recognize greenhouse gases are bad. And using some of the data that we had in Quantum, I looked at the points and I said, this is crazy. I did a Google search and no one was really talking about it. There's some reference to that today. But let me quickly move to what that slide is. Sorry, this is a slide about reporting in India. Companies that are reporting, which is a big orange line, and companies that report in a more detailed way, which is a blue bar. So it's a very small number yet, and obviously it's improving. This is the slide and the data points that got me off the beach. And what it really says is, let me get the laser here. So in 1990, in all of India, we gave out about 1.1 billion tons of greenhouse gas. And by 2017, that number is 3.6 billion tons of greenhouse gas. As you know, we're roughly about 60 billion tons today. And the plan, as per the Paris Accord, is by the year 2035, the world will remain at 60 billion tons of greenhouse gas. Well, if you assume that an Indian will keep on consuming and growing as the economy develops, they consume and they buy different products. So we've gone from 1.3 greenhouse gas tons per capita to 2.7. And the question I asked myself is, what if an Indian 16 years from now, in the year 2035, consumes like a global citizen, or consumes like a Chinese does today, or like a European or an American does today? So to give you one quick stat, in China, they sell 55 million air conditioners every year. In India, we sell 5 million. It's not difficult to imagine that in 16 years from now, as Indians develop and as we get polluted cities and more heat waves in India, people buy more air conditioners. And then you start asking the next logical question, well, who's going to power and how will those air conditioners be powered, and what about all their greenhouse gas emissions? And the numbers are absolutely frightening. So if an Indian consumes like the world average today, we add about 8.8% to the 60 billion in greenhouse gas emissions. If an Indian consumes like a Chinese, we add 12.5% to the greenhouse gas levels of today. And if we consume, God forbid, like an American, we add 35% to greenhouse gas emissions. What that really means in hard numbers is that if we consume like the world per capita averages, we get to 65 billion. If we consume like a Chinese do today, 16 years from now, 67 billion. And if we consume like the Americans, we're at 81 billion. I have no idea what the Indian government is planning to do. I know we can all sign treaties. I don't see anything that gives me comfort that we understand the scale of the problem. India is ground zero for fighting climate change. And Extinction Rebellion can do wonderful things in the UK, and they be on the right path, and they can take the UK's consumption from 1% of global level down to 0.5% over the next decade or so, if they get all they want. And whatever all the stuff that you do in the Western world, in the US, in Canada, in Scandinavia, in the UK, will be blown right through with what happens in India. So yes, I'm glad that there's this conference. I'm glad that people recognize there's a country called India. And I'm glad that Dayal also pointed out that the amount of money that's required, that's being invested today, is very small. And what's required is huge amounts of money. Huge amounts of money. And the money exists, but just that will and desire to recognize that if you don't get things right, you're sitting at 81 billion tons of greenhouse gas emissions just because of India, all else being equal. And that's a huge number. And in the morning session, there was a talk about the intensity of GDP per capita in terms of having less greenhouse gas. This factors that in. It doesn't factor in a 33% cut, as was mentioned this morning. It factors in roughly about a 20% cut. If you do get to that 1/3 level, as some people claim we do, that'll come down to 75 billion. That's still way above the 60 billion limit of the Paris Accord. So this is what brought me back from the beach. And I said, I'm going to go out there, raise a fund, get $1 billion, and start investing in listed companies in India, make examples of them in terms of making sure that they do right things on the production line, bring their greenhouse gas emissions low, and make an impact and make profits. And the strength of my commitment, I left a beach in Florida, and I signed up for a lease in London starting September. So I'm sitting here in winter weather in London when I have no reason to do so at all. So that's why I'm here. And again, we spoke about this, the 3 Ps, the planet, people, and profit. And what worries me about the field of finance is that we can smell money so easily. We had the brick theme in 2005, 6, 7, complete rubbish that it was, but it generated a whole bunch of fee structures for the field of finance, created a complete sort of, wipeout of wealth for those who invested in those brick themes. And now I worry that we have a green theme going on, and we talk about greenwashing. And I worry about the sincerity of the field of finance in general. And what I did hear this morning, that was what Howard said earlier on, is that sometimes for making more profit, we will talk about this stuff, but we really don't care about the other 2 Ps. Show the field of finance money, we can smell it, and we'll make the profit. And we may not care what's happening to the planet, and we may not care what's happening to the people. So that's my concern, that's my fear. With that, I will probably sit down and wait for the panel to carry on. Thank you.
Thank you, Ajit, for that. And I think I'll start sort of on the panel with the question that we've noticed that India has this large potential, large market, the highest impact. So therefore, for any investor, actually, when you're going from an impact, sort of the delta, sort of just talking finance terms now, you can actually, your multiple of your company can go from 5 to 10x, but just improving that. So why is it that India is not attracting that level of investment?
But, I think Indian founders of many of the listed companies, and these are really, as we mentioned, family-owned companies, they haven't understood the full impact of this. And from their perspective, it's still business as usual. How do I extract money from the company and maximize my wealth? And the wealth they talk about is P for profit. That's it. It's not wealth of society. Yeah. So I'm not a big fan of Indian founders, as you can make out. And we're very, careful with the companies we invest in. And I see very few people really wanting to change. So at the start of the year, we had a run-in with one of the largest companies in India. We held about 0.7% of their shares. We met their CEO and explained what our concerns were on governance and also environment. 2 things happened within 6 weeks in that company, which made us review our decision to buy. And, much larger funds, which have larger stakes than us in the company, right from BlackRock to JP Morgan to SBI to UTI, et cetera. When we reached out to some of them and spoke about it, they said, well, we don't care. Now, you can have chairmen of companies writing wonderful letters, but when the rubber hits the road, the fund managers in India really don't care about what the chairman's letter says. That's all kind of PR stuff in my view. And we saw that in action. So you don't have fund managers who strongly believe in ESG, and you don't have companies who have the reason to do so because they have pliant shareholders. These are companies that are doing horrible things. They're building a coastal road off the west coast of Bombay right now, and that could be an economic and it could be an environmental disaster. And yet, we are all supporting companies which are implementing the coastal road. So Quantum just sold out its shares, and this is the wrong thing to do. But the company doesn't care because everyone else is willing to buy their stock. So in fact, in a few slides, in one version of this book, I'd given 6 examples of Quantum where we've tried to engage with companies, and most of the time we failed, because unless the whole industry takes them on, they don't care about changing.
See, India, we look at the total capital which is coming into India is anyway very small. So as proportion, we are not significant, but still money is coming in. And I'm not so pessimistic about India, because what founders and promoters are talking about is, I think their generation is soon is going to be over. We've already seen so many companies falling down, and we'll see more companies closing down if they don't change. And what I see in India is a new breed of entrepreneurs which are coming up. They're socially much more conscious, they're very different. The next generation of entrepreneurs which are coming from the same families who understand the importance of climate change, social responsibilities, corporate governance. So I think India is going through a major change. We'll sit here 5 years later, we'll be saying, bravo, India had changed. What government is doing is, today we have the finance minister sitting in jail. It's unprecedented, never used to happen. The courts are becoming more active. There are social activists which are acting in India. China has polluted the world for so many years. We never talk about it. US polluted the world. Look at the greenhouse emissions by US. Huge. We should be running down US Americans. They don't give a damn. Trump doesn't believe in global warming. India is far better, much more responsible. I think we have to give credit to the India, but at least we have such a big change on the power generation side. We're going to see a major change on the electrification of cars, mobility. So I'm a very positive about India. I think we'll look back 5 years from now, we'll say India has done a wonderful job. I'm very optimistic that India will change, and new breed of entrepreneurs are going to be very different to these conglomerate. We had these founders, so-called, they believe they can rule the India. They can run the company the way they like. And I will just share with you one example. I won't name the company. In 2007, 6 or 7, we had a meeting with Baillie Gifford in Edinburgh. And they were asking us, are you doing anything with this, one of the largest company in India? I said, we don't get those kind of deals. They said, thank you. So people are, conscious, they're aware, there are large funds, they're not investing in India and those large companies which are polluting the environment, where the corporate governance is question mark. So I'm very positive about India. I would only talk about 5 years from now. Thank you.
So if I may add, while there's some degree of regulation already in India, I think there needs to be firstly an enhanced degree of regulation, and I'll give you an example specifically. And also, whatever regulation is there has to be followed in spirit as much as it's there on paper. Now, for example, everybody's heard of the GRI standards of reporting globally, which is actually mandatory in, I believe, 40 countries around the world. In India, we have got the BRR regulations by SEBI, which is mandated for the top 500 companies. So that is there. Now, the BRR regulations, nevertheless, at the moment is a tick in the box sort of a regulation, which needs to be actually more specific. And, just like the GRI regulations need to be more detailed. And of course, the second thing, as I mentioned, is that it needs to be followed in spirit. Taking off on what Ajit and both Raj mentioned as well, I think it's the newer generation entrepreneurs, the more professional guys who are also taking the lead. It's very interesting to note that actually if you look at the whistleblower statistics, the top 6 whistleblower companies are actually the tech companies and the banks and professional banks. You think that, my God, they're breaking the law the most. Actually, they're not. They have actually whistleblower policies. That's why they're being used. It is the whistleblower policies that is, I mean, and they have internal training which encourages you to actually blow the whistle. And therefore, it is actually being used effectively. While in a lot of promoter-run companies, those policies may be there, but it actually needs to be followed in spirit as much as you just talk about it, basically.
So it seems like sort of obviously culture change is taking place, but it's not at the pace that we would want. But what do you think is the low-hanging fruit, or what is the carrot that we can offer to promoters to actually make? Is debt one of or remuneration?
No, I think it's training. What they need is, we have to create more awareness. And what happened in India is phenomenal. And the use of plastic. I know so many cities where the plastic is banned. We still use plastic in London. So and people are becoming more aware. I come from Uttarakhand, hill areas. There's so much plantation drive going on. Of course, you always have a trade-off between the development and the preserving environment. Both have to be balanced. And India has to grow. They have to build infrastructure, unfortunately, because the rest of the country is done. US has built infrastructure, Europe has built infrastructure. They have done whatever damage they could do. China has done it. So India will have to do in a balanced manner. I think India will be more responsible, I'm hoping. Of course, there are always issues when you look at these things. I think incentive would be creating more awareness and training by giving extra loans, profits. That's not going to change the mindset.
Yeah, I don't think the large people are going to change at all. I'm not very optimistic on the large established groups changing, by and large. I mean, most of them.
I'm a fan of a carrot and a stick approach. I think the carrot approach is actually, so as part of this endeavor of writing this book, we went around and met a lot of companies, board of directors, etc. And to demonstrate to them that it is profitable for them if they do it. The cost of capital is a lot lower. The longevity of business is significantly longer. I mean, you may, a chemical company told us a very interesting thing, that I can have a certain discharge and operate within the norms today, but then I will be able to make a reasonable amount of money for 3 years, 5 years, but 10 years from now I'll potentially have to shut down. So I'm going to have a zero discharge operation, and that's the motive that one needs to encourage and actually to inculcate. So that's sort of greater awareness across the board. And the stick is also to make it visible to them that the companies which have gone bust. In fact, there's a study done recently that 90% of the bankruptcies in the US could actually have been avoided if the companies were following higher standards of ESG. So, one needs to actually make, significant awareness, and that's what we at Edelweiss have actually been attempting to do, is, you just can't give up on the system, the promoters, the entrepreneurs. You actually have to show them even that there is money to be made in this.
I think we've only probably running out of time, but I'll ask one question and then I'll open it to the audience. So in terms of strategy, I mean, you said you'd avoid the large caps. Mm-hmm. We're also talking about exclusion of power, and also there's energy-intensive industries which are needed for India, whether it's cement, steel, automotive. So where do you think, what is your strategy for investment?
Yeah. So there are about 6,000 listed companies in India, and there's like a long tail of pretty bad, poor companies, and then there's a middle bunch of companies, probably somewhere in the region of $500 million market cap to $2 billion market cap. And in our view, if you engage with them and you make them the sort of standard bearers of how ESG improvement will enhance the wealth of the founders, and many of those companies actually are part of the supply chain. So they will supply things to the larger companies. So you can't get the large companies to change, I think, in our view, but you get the small ones who supply to them to change. That becomes a cascading effect. So our approach is that. Go for the small, mid-cap companies where you find people, and it's more difficult because you have to do much more work on governance in the smaller companies than the larger companies.
Well, more than small and large, actually, I'm indifferent. I mean, I think that one should be following the sort of 6 theme opportunities that we've highlighted, and entrepreneurs, large or small, will follow. And the opportunities in itself create actually low pollution levels, social causes. So if you look at digitization alone, just in the e-commerce space, that's a $1 trillion opportunity. And that effectively does a lot of things, reduces the cost to the consumer, which is a great social cause. It makes the supply chain more efficient, and in fact, the unorganized sector is a 90% of that market. Taking e-commerce to that level actually makes the small guy more efficient and more competitive. I think the small guys are smart enough to follow through. I wouldn't really worry. I mean, I'd let market forces take over, and I'd say, these are the big opportunities, follow instinct.
I think for me, if I were to invest, I don't directly invest in the companies except for prop money.
Yeah.
Corporate governance is how the board is and how decision making is, how socially aware they are. So this will be the criterion rather than looking at the size of the company.
Okay, with that, I'd like to open it up to the audience for Q&A. And I think we could take 3 or 4 questions at the same time, and then whether it's specific to a member of the panel or across the panel.
Very profound presentations. Parallel to corporate governance, I would have thought, is judicial governance. A lot of India is still steeped in an era where people are locked into various practices. It's been alluded that corruption is one of them. The panelists' views.
Sorry, can you speak up a bit?
Louder? We can't hear you. Sorry.
Should I start again?
Sure.
Okay. Really good presentations.
You could just
No, just put the mic closer to your mouth.
Sorry. Parallel to corporate governance, I would have thought, is also judicial governance. And a lot of India is still steeped into practices and activities which do not align themselves to a culture of transparency and fairness. That's my question.
Okay, I think we'll take 2, 3 more questions before we...
I guess the approach to ESG is to slow down climate change, and most of the initiatives that have been discussed here is about slowing down. Has the panel thought about how we might reverse climate change and whether the extra monies that are required would be better served pursuing that objective?
My name is Sesh, and I'm from Basis Fund Services. I'd like all of us to rewind about 600 years ago, when India was probably about 26% of world GDP. That's a number that you get. And we lived harmoniously with nature. So what changed us the last 600 years is possibly mass industrialization. And you fast forward that to today, we do have national green tribunals. In the coastal road that we are talking about, there's a plan, while on one side the mangroves may be destroyed, on the other side they are replanting trees to compensate the carbon increase. Likewise, in the Array project in the metro shed, they have cut 2,500 trees on a private land owned by the government. They have replanted trees. So are we really considering the National Green Tribunal, the replanting, the very fact that we had a harmonious equation all into this discussion?
Maybe I'll take that last one first. So I think on the coastal road and the sort of the RA depot that's being built for the metro, I'm part of two groups that on the environment that are fighting this or trying to raise issues around this. And both of them, the government, I think, is doing the wrong thing based upon what, I'm not an environmental guy, based on what the environmentalists are saying. If you just chop a tree, you can't just replant the tree. It takes a few decades for that tree to absorb the carbon that you've removed from the chopped tree. Same thing with the mangroves. You just can't replant mangroves. It doesn't work that easily. So there's a lot of sort of environmental groups fighting the government. And sadly, we have the courts that do not seem to understand that. And the courts have actually allowed, because of very poor judgments, which are now being challenged in the Supreme Court too, they've allowed them to do stuff which is really harming the environment. And Bombay as a city is definitely going to suffer over the next 5-10 years once this coastal road is built and the RA trees are knocked down. On the point about governance and on the point about climate change, trying to reverse it, the second question, if you again take the example of the air conditioning units, so a bit like the Tesla car. So Tesla has come out with car technology which allows you to move from A to B and reducing the carbon footprint dramatically, in fact, reversing it to some extent. And in a very similar way, the idea is that you inculcate in small mid-cap companies technologies which not only reduce carbon footprint, but actually try to reverse it. And there could be various ways around it. Again, I'm not the tech guy in the team, but there's a lot of thought behind that. So companies are trying to find ways where they actually generate good in the environment, as opposed to just trying to reduce the bad for the environment. So it's happening.
So if I may try and address the first question, and just to get the question right, I guess you talk more if the judicial will is there to actually do this. I'll give you an example. In Morbi, which is the ceramic capital of India, and that's a $10 billion industry there, coal was being used against the law for a very long time. And the law was there that you cannot use coal. You have to, it's extremely polluting. It pollutes the groundwater as much as the environment. But it was business as usual because it's a very large industry there, and the livelihoods of a lot of people were under threat. Very recently, the tribunal has enforced that. They've said nothing doing, stop it. And frankly, so the guys have switched over. What the cost has increased by a little, by about 10%, but actually the quality of the product coming out of that is higher to more than compensate you for the cost increase. And as a result of that, it's business as usual. You're still making money. So a lot of times it's actually enforcing that judicial, in fact, the regulators themselves enforcing the laws which are already there, and really then it doesn't make a difference to anybody. It's business as usual.
Yeah, I think
Just we're running out of time,
Yeah.
so I can answer that question separately.
Yeah, I think you've got to, if you look at UK, they have target of 2050, there'll be zero carbon emission. So every government has various means and ways. Renewable energy is one area where India is targeting to increase the share of renewable energies. And then also electrification of cars is going to significantly change. That's what you're talking about technology. I think new technology is going to come in over time where we can mitigate the impact of the growth which is coming because sheer size of population or consumption habits are changing. So I'm positive that we will also go through the same cycle what developed countries have gone through. They were increasing the greenhouse gases over time. Now UK talking 2050 we will be basically zero carbon emission country. Same way I think India will go through. We will increase greenhouse gases, but I think India is being very responsible because they are implementing now what these countries didn't implement. We're talking about no use of plastics, planting trees, so they're much more aware today. 20 years ago, people were not talking about climate change. So countries were not responsible. So I think India's impact on the greenhouse gases emission as compared to other countries is going to be much smaller. They'll be more responsible.
To add on the renewable energy front, India's got a significant target of 175,000 gigawatts, I think, by 2023-24. In the last 2 years, you barely added about 15,000 gigawatts. You're at about 80,000. So actually very far away from the target, and that growth is slowing down. And that is actually a very big polluter, which is going to be an deal breaker for all this. And what we realize is that the old problems haven't changed. Why is the renewable energy growth slowing down? Because the states still have the same problems of paying up in time, and entrepreneurs realize that they've set up plants, they're not being paid on time. Also, in the bidding process, the cap for the pricing is actually very low. And again, entrepreneurs are not bidding because they realize they're making 10 to 12% returns with a very high risk. So why bother to invest? So I think while it's good big picture to have these big targets, but India also goes through these cycles of understanding what works, doesn't work. And I'm sure this will get corrected because this is a serious sort of top-down push which is coming.
So I've been given the nudge to now kind of conclude. Thank you very much to all my panelists. And it seems like technology, transparency, and training is obviously the need of what India needs today to accelerate investment, its ESG investment. And at that note, I'll sort of thank everybody.
Thanks, Pooja.
Thanks.